Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you on a Tuesday. Wanted to walk through a few of the harvest delayed states that I like to track here when these crop progress reports come out from USDA. Here's a look at the states that are furthest behind on their corn harvest activity. Kind of an interesting factoid here to find out where the biggest problem areas are. And as you can tell, kind of like what we saw last week, it's all focused on the northwestern half of the Corn Belt. So we have North Dakota, the furthest behind. They are 12 points behind their average pace. South Dakota, 10 points behind. Iowa, down by 9. And Minnesota, 7 points behind their normal pace. And Nebraska, 4 percentage points behind normal on their corn harvest. Let's take a look at soybean harvest delays here as well. And here we have Michigan with the biggest lag time, if you will, on their harvest activity. They are 12 points behind schedule. Nebraska down 10 points. Iowa 9 points behind. Kansas also 9 points behind. And South Dakota is 4 points behind their normal pace on soybean harvest. Let's go to the futures trade and welcome in a little guest analytical help as well. We have Todd Bubba Horwitz in Chicago. He, of course, is with BubbaTrading.com, and he joins us right now to take a look at today's trade. Todd, thanks for joining us. In the early market action, let's look at the corn market and see how it's doing. We'll look at the soybeans too. Right now, corn down just a penny on December at 3.47 per bushel. March down a penny at 3.57. Soybean trade here we have November now trading at 9.81 per bushel. That's down 10.25. January is now becoming the most active month, I believe, Todd. That's down 9.25 at 9.93. I don't know if you would agree with that or not. It sounds like a lot of rolling out of November now.
No, good morning, Marlon. It is now called top step or the active contract, which is correct. And I think the more important story that we look at in corn is that we had a much bigger rally this morning, and now we're selling off. I think you got to watch 345. I still like corn, but we got to hold. When we get back to 345, which I think we'll probably get there today, we've got to hold that level to see higher prices. I think that we're going to go higher. I think that we're now in a range, 345 to 365, and I believe that there's a good shot we can get even higher than that. But for right now, 345 becomes my concern. If we can't hold that, then we're going to go down probably lower than that and maybe back down to the 330 level. So we're coming to a very important area. We've had some nice little whipsaw in here the last couple of days after pushing through. We're going to see it and test that area again. I think soybeans showed us the exact pattern we've been watching for the last 5 or 6 months. $10 is pretty much the top end of that range, and until we can break out of that range, we're going to continue to see this. And I would certainly look for a pullback to the 940, 950 level now, because we're still in. It's 14 weeks in a row we've been between 940 and 10 bucks. I think we've now moved into Jan, and we continue to see the same pattern. And I think you're seeing some weakness in November, which I think is natural because it's been a fairly tough market. So I think we're going to see some liquidation in here. But overall, I like the space, but the levels have to hold. And we've got now the dollar is starting to move higher now. I think the grains have still priced in a little bit higher than the dollar, right? The dollar is over 99 now, almost to 100, which I think we're getting to the 100. I would almost guarantee it. And then we'll see what happens from there. And wheat, of course, has been under some pretty good pressure here. Just broke below $4. But I think wheat looks like a great play here, and I think there's a great opportunity to be a buyer of wheat right in this area here. And that's the way that I would play this whole space right now.
December Chicago wheat currently down 1 3/4 at $4.75. Kansas City wheat on December now down a penny and a quarter at 4.11 1/4. And in Minneapolis wheat we have December down just 1 tick at 5.24 per bushel there. On the cotton market, here we have the December contract. If we can roll over to cotton, December now at 68.19 cents per pound. That's down 58 points on the day. Todd, I want to bring you back here in a moment. We'll analyze the livestock trade. I know you've been a big fan of watching that here lately. We'll talk about that when we come back. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling, and on the other end of a long fiber optic cable in Chicago, we have Todd Horwitz standing there. He's with BubbaTrading.com, right there at the edge of the CME Group trading floor. And Todd, thanks for joining us. I want to talk with you about this livestock trade here. We've had some pretty good rallies here in the cattle market and also in the hog market here. I understand we're, at almost 1 month highs now in the cattle market. Is that enough for a while, or what do you think about this?
Well, Marlon, as we've been talking about for the last couple of weeks, there were certain things that we were expecting to happen that had to happen to help us out here. Now, the initial push down I thought was on a lot of forced liquidation, but last week when we got down and made new contract lows, I felt that if we could hold that area and move up a little bit, then we would start to rally. And of course, Thursday, Friday, we had the rally, and of course, it followed through yesterday. I think now what you're looking at, I love the space. I'm still looking to get in now. But now I think you look at the fat cattle, 104 to 106 is probably where it's going to pause for a little bit. Look for a little bit of a pullback down to probably 102, which is fine. Again, we don't want to see the markets go straight up other than if you're going to sell them tomorrow. But if you're going to own them and want to see a longer rally, look for a 102 buy probably, because again, this level is going to be a little bit tough to get through. This is kind of where we broke down from. And we move over to the feeder cattle. In November, 124 will probably be the overall top here. And again, it may be for a couple of days, whatever, but a little bit of a pullback is always healthy. It's much healthier to see trade, which attracts new money, versus straight up or straight down. Those are not markets you want to look at. And I think they both look great. I think they held those contract lows, they moved up, and they were able to sustain some support. Now I think we're going to continue to see new buyers stepping in, and as we get past, usually the slower time of the year, this is a big time to get through and to be making a comeback from. And you look at the hog markets, I mean, we looked at 40, 41, and we said as long as that could hold, we'd see a rally. I think look at 45 here to the upside, and that should create a little bit of selling, but then I'd look to be a buyer back around 43 again. Across the space, I'm looking for spots to buy. I'm not looking to sell these unless you're a very short-term trader. But overall, I think the picture looks good going forward.
All right, let's walk through some of these prices here. We'll start with the live cattle trade and get everybody updated on the latest trades. We've been on both sides of unchanged here. In fact, October is down 12, but the most active December is 3 cents higher. Boy, that's a big gain, $104.28 per hundredweight. On the feeder cattle trade, as we flip over there, November up 60 at 123.12 per hundredweight. And on the lean hog trade that you were talking about, we have December down 98 higher once again at 44.18. I believe that's 4 days in a row now of upside potential here. The February contract 82 higher at 50.52 per hundredweight. Todd, earlier you were talking about the value of the U.S. dollar, and I understand that they're kind of running the dollar up today with thoughts that it's looking more and more likely that we will see interest rate hikes. How much impact is that going to have here on our grain and livestock trade?
I don't think it will have much at all. I think that the farmers and producers were smart enough, and they kind of priced in this dollar move to the $1 point. I think they've already really built that into the markets here. And I think that you will have a rate increase. But the other thing that nobody's talking about is even if they don't have a rate increase, when there's fear and there's troubles globally, money runs into either the U.S. bonds or the U.S. dollar. And I think you're seeing a combination of both, which I think will be enough to propel us up to the dollar. But I do believe that the farmers and producers have already priced in that move, and they're prepared for it. Because we can see that even though the dollar's been making new highs almost every day, our grain markets and our cattle markets have started to pick up anyways, because I think they were smart enough to price this in a while ago.
All right. Thanks, Todd, for the insight into the markets. Todd Horwitz with BubbaTrading.com in Chicago. So there you have it. A little profit taking in the livestock trade today.
Yeah, we'll have to keep